Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino, who should be on here again tomorrow afternoon. So, if you want to hear what Bob thinks, tune in then. Good afternoon, Davey. Good evening, Anissa. Hello, hello, Amit. Hope you are well. How is everyone doing? Did you get to participate in the rally today or not? Again, CPI, let's put up the little numbers. CPI, for those who somehow missed it, you would have had to not tune into the live stream. The CPI coming in slightly better than expected, but if you listen to everybody, it was still pause or pivot. Look, inflation is tamed. It's going away. I don't know what's shifting there. And even though the core inflation pretty much staying the same as previous. So that's the mode the market's in. It's still in go-go juice mode. Again, I think we're going to hit that 200. Oh boy, Tom, are you here already? Let's see who else. It's 16:35. Is this live? Yes, this is live. We are live. Hello, Amadeus. So, again, the rally continues tomorrow, 30 minutes, 1 hour before the open. Keep in mind, PPI, Producer Price Index, more minor. Can I say that? More minor? That doesn't sound right. But that's coming out. We have continuing jobless claims. If Patrick was here, he'd remind you of the magic number of 1456K. But I don't even think it's going to matter what the PPI does tomorrow unless it's a huge miss. But if it's a beat, do we just continue the rally mode? So that's where we sit. Again, Producer Price Index year over year forecast 10.4. So coming down pretty substantially from the previous. Now, do we beat that number or not? So we'll see. If the energy plays the same amount, then it could be another beat with that. And then remember, we have consumer sentiment on Friday. S&P 500 map. Apple closing in on that double target, but your mega caps massive rally. Pretty much green across the board. Nowhere to hide. Well, maybe the CME group right there, down slightly. But everything else, what else is the Dollar Tree? If you put everything in Dollar Tree today, sorry. Everything else pretty strong. FOMC, the 75 basis point dropped. We had Kashikari coming out again saying, things are getting ahead of themselves. And Kashikari, again, the risk of recession would not deter me from doing what's needed. Again, hikes going into they keep stressing, we're not going to pause. Even though, literally everybody I know has been trading in the last, even within 10 years, is just Fed's going to pause, Fed's going to pivot, we're going to juice the market again. Nobody is trusting the Fed literally since we've been in printing mode. Now, the only people I hear not buying this rally from a long term are people who have been through multiple bear markets. But they're also getting their face ripped off. So, well, not necessarily ripped off. They're just sitting there going, the smart ones are positioned long or at least neutral, letting this die out. So, where do we sit here? Hit the mic button. Hey, George, how are you doing? Hey, Chris, good. Glad. I like to see new faces coming in, too, besides the old faces. Show goes on. Mike, I'm concerned the chart you showed on CPI and Fred, it seems like inflation never really goes down, more like it stabilizes, never goes down. It can go down a little in recessions, but then it just keeps, when you're targeting even 2% inflation year over year, think about it. It's always long-term going to go up. Think about that. So I'm going to try to attack the European session with shorts. I'm not attacking anything with short. I'm waiting for a short signal. Okay, I'm not trying to call tops in this market. All right, the market's too thin. The market, and I said I'm in medium-term bull mode. I even said it, we got that breakout above here. I said it last week on when we recorded. That was on the Gym Area podcast. I've said we may actually have some longer-term signals with this amount of stuff flipped to long mode temporarily, even on long term. This is a pretty substantial rally. The only topping signal I have is a potential double top, remember, potential. And if people email me about saying a potential double top is a bearish call, no, it's a potential. It's observing what the market's telling me. It would need to get below the low of 12,963.25 before it triggered. So don't email me and don't message me. Rich thinks the end of August bears will return, or possibly after Labor Day. Possibly after Labor Day. So, again, you have to trade what is, not what you think should happen. And you have to analyze, from my perspective, you don't have to do anything. You have to analyze both sides of the market. Why do we analyze both sides of the market? And then you trade what happens. You analyze both sides of the market so you don't have blinders on. You trade what happens, so you're trading what is currently going on. Not what you think should happen. Not that you think, hey, you know what, 6 months the market could be lower. Yes, the market could be substantially lower. But until we get a turnaround move, we get to trade what is. And it's the same as people trying to call bottoms right now. I see a number of people who are long-term bearish, which is completely fine because long-term I'm bearish. But it's completely saying like people who tried to call the bottom all the way down. All right? Tried to call the bottom all the way down. This is the bottom. This is the bottom. This is the bottom. Oh, yeah. No, wait. This is the bottom. This is bottom. Oh, wait. No, this is the bottom. The bears are now getting it. Well, again, they were the top. Uh-oh. Okay, that's why you have to trade what is. Let's get all the people wasting Mike's time to find something else to do. It's far too valuable. I'm not even going to respond to inane comments anymore. All right, because it would be the same as somebody coming on here and saying I've known people who've been bearish for like 20 years. Everything is bearish. Everything is bearish. No, there's a time to be bearish. There's a time to be bullish. There's a time to be, and don't mix up your time frames. What I'm trying to do is teach people to analyze both sides of the market, get the probabilities in your favor. Does that mean if the probabilities are in your favor, does that mean every trade's going to work? No. You get the probabilities in your favor, though. Okay? And you get the probabilities in their favor. Why are the probabilities of probabilities? Because the probabilities aren't based off what I think. The probabilities are based off of mathematical models and system testing and statistical evaluations and everything else. It's not what I think. I hope you're not tuning in. I mean, you might want to hear what I have to say about some things, but you're not tuning in for me to say, I think the market should do this, or I think it should do that. I'm trying to show you the patterns. I'm trying to show you the probabilities. I'm trying to get you to analyze both sides of the market. I'm trying to get you to limit risk on both whenever. If you're bullish, there's times, you know what, you should always respect risk because risk will take care of the winners and then you let the winners run. Just like I know options 22. He should still be long Qs. You can tell me if you got out. But look, I'll give you an example. I said today I trail. Now, do we have a potential double top in the Qs just like the Nasdaq? Yes. Does that mean I go potential double top, get out? No. Why? because it would need to get below 315.42, especially on a closing basis, to properly trigger. And it's still against the daily rotation zone. Could this keep just rallying and become invalid? Yeah. So guess what? Guess where, if you're longer term this, and I'm not talking a day trade, I'm saying longer term, your stop is going to be below here. Or the add on closing basis down there. And you're trailing, continuing to run it higher. If you're shorter term, again, depending on your time frame, depending on your mode, depending on what you're doing, you have some other things. Look, you start breaking down, even back below 323, you might tip to like a little shorter term bearish, and then below 322, playing for the gap fill. So that could even be bearish, and then you could revert to bullish because this double could never trigger. So just like those bulls were trying to call every bottom and a number of them got their face ripped off, the bears are now trying to call every top. Worry about the high probability tops if you're bearish. Other than that, you got to trade with the trend. And then when it turns round again, I'm going to give the same advice to the bulls. Stop trying to call every bottom. Wait for a high probability reversal signal. And don't try to call every low as the low tick. Just as don't try to just short. I'm going short today. What's your signal? Like, I don't have any, I have this potential signal, but do I have anything? I mean, you could say, look, we got waning momentum. We got a divergence on the 5-minute bar. Does that mean I go short? Not in your life. Because I'm not trying to call this, because this could be higher tomorrow. Learn to analyze. Learn to get the probabilities in your favor. I don't care if you're bullish or bearish. Learn to maximize returns, minimize risk. That's what I'm here for. And if you think I'm here to be right about something, I don't care, because I'm not right or wrong if it's the probabilities. All right? If a trade gets stopped out, the trade got stopped out. It's only if I invested my ego into it saying, look, and you're going to be wrong. Even with 70% probabilities, with 80% probabilities, you're going to be wrong. So get out of your own way. That's what I'm trying to get through to people. That's actually, and I didn't feel like doing a live stream today, this afternoon. I'm tired. I'm especially tired of responding to people. But you know what? I'm here because I want to get things through people's heads. And you know what? I'll show up. And if people don't want to tune in, they don't have to tune in. And again, I'm not going to respond to inane comments because it's not worth my time on any side. So if somebody comes on here every day saying, I'm shorting this rally, I'm shorting this rally, I'm shorting this rally every day, that's just an inane comment. Just as somebody coming on here saying every day, stock, except on down days, stocks always go up, stocks always go up, which is an inane comment. Not all stocks always go up. And in bull markets or stocks, and with a long-term bias, most stocks in a long-term bias from good valuations go higher. This year was a tough year to trade, and some years are tough years to trade. Also, there are systematic approaches, completely systematic approaches to the market, which overall I know a number of them that do quite well. Yet they have years where they could be flat to slightly down. Why? Because they could be tough years to trade, even for a fully systematic approach. Not every system produces 20% or 10% year over year every year. That doesn't happen. And I know some really good systems out there. Really good. And there's years that even the best ones can have 5% down years. Even some of them can have 10% down years. But then you can have a series of years where they produce really good returns. And that's completely systematic with, I'm talking very high quality systems you won't see just sold over the internet for everybody, or you won't see them just promoted for $99.99 on YouTube. Hey, Josh, thanks for being here. You know, I appreciate everybody. My penny starts to recover a little bit. Maybe the bottom is in. Dark screen, please manage your penny stocks and learn to. This is why this. I'm sorry, I'm not picking on you, but this is again why we're not here. All right, and I'm putting up this because this is an absurd. We will never see the SPY below 400 ever again. Are you sure you want to make that statement? That is an absurd statement. That's actually one of the more absurd statements you've said ever. You're never going to see SPY below 400. That's it. So you're telling me we couldn't even get... See, this is why I'm not going to take this stuff seriously. So even from the 200, a correction back, if we did rally to 200, that would only be a 7.5% correction, even if we get to the 200, which I'm expecting. We can't have a 7.5% correction? Look, I'm saying we're not going to see zero within my lifetime. Hey, you're welcome, Amit. I'm not worried about him. I'm just tired of it interrupting the stream. This is just like I'm tired of those spam bots. Those things drive me crazy. I wish there was a way to permanently ban them. If YouTube wanted to be serious, they could easily do that, you know, but they're more worried about banning somebody who talks about something they don't like. Oh, I'm just in a mood now. All right, so Mike, so I can verify my analysis. Can you show the GAN levels on... I've just been calling... They're not technically GAN levels. I just do it so people have a... It was more of something so people could relate to it. They're actually harmonic levels. GAN never taught that stuff, but he did work with eighth intervals. That's why I call it that. Can you verify my analysis? Can you show the GAN levels on the QQQ gap and the potential double harmonic extension? I don't understand what you mean by double harmonic extension. The harmonics from the gap play, if you're trying to play for the gap harmonics, it would be from this close and you'd just be trailing it to the highs. And then remember, so it'd be trailing, and then you keep that up until then once you get the close below about at this point 320 38. That would be the line in the sand now for the gap fill. From the, and that's going to be different when you play the gap fill from the most recent retracement harmonics. It's slightly different. So do keep that in mind. Now the extension harmonics I still have on from the reverse extension which we could do from yesterday's low. Remember, the reverse harmonics is what I'm using right now. Okay, which we got from yesterday's low. So that's giving me 327.85, 329.23. So those are the harmonics based off my years of doing this that are the probability ones for the short term. And then you have a majors I went over this morning, just off pure price action analysis. You have this major close here. I went over this with for options 22, 329.60. A major close here. A key close bearish here. And you see the gaps through. That's a significant level right there. And you see some prior reactions to that level. So that's where we sit with the Qs. All right. Looks like a potential daily double bottom on crude. I'll just get through some of these comments, then we'll go back. Yes, that is a potential daily double bottom on crude. You guys are getting good. Let's see. And again, you need to verify it. And this, since it's now going against the long-term trend is down, use the conservative harmonics. So especially you could play this for a break, but again, the higher probabilities of the close because it's against the daily rotation zone. All right. And you see how well the daily rotation zone, we got the first cross, rotation zone, boom, rotation zone, boom, rotation zone, boom, rotation zone, boom, rotation zone, boom. Now, I'll give you another little secret. Once you get about 3 to 5 moves, substantial moves back in the rotation zone, and this would still be 1. So this would be 1, 2, 3, 4. Once you get 3 to 5, the rotation zone's softer, and you generally might get the bigger pullback. So that's why I'm also keeping an eye on the weekly. Now, this double, look where it takes us. Straight back to the weekly. So that's why, again, you could play this easily to the upside, but does that mean long-term bullish yet? No. That means a short-term correction even back to the possible weekly rotation zone. Targets, first target lining up with the daily rotation zone, 95.15. And against the trend, I'd actually make a stop 94.95 on that. Second target, roughly in line with the 25% harmonic from this retracement, right around 96.14, 97.64 third target. Yes, cycle's not at the top yet on the daily. Cycle's at the bottom, still turning up on the weekly, so we could easily run up and look at this. This is where it's important to analyze. You see all these candle bodies. Well, look at where the candle bodies, look at where this prior, remember all the dip buying in here? That's all the potential rally selling, and look where it runs up to with that double and the rotation zone. That's how you analyze both sides of any market. So, Jake, yes, that was a double bottom on crude. Well, hey, Patrick. Hey, I'm glad. Thanks for being here. I think having lunch with the wife is more important than listening to me ramble on. You know, I still respond to some stuff, Kalani, because a lot of people still tune in and watch the replay and look at the comments that scroll by. And now I'm pretty much done. Could you give your opinion on the NVIDIA gap fill play, and then we'll get back to the markets? Or you know what? We've got the PPIs tomorrow. The gap fill play. Again, that's actually the gap fill play from the statistical probability from the lows. You're watching, so you're long from 180. The statistical, I'd need at least a close, even on a shorter term basis, a 15-minute above 180, 139. Okay? And by the way, this is not an inverse head and shoulder because you don't have a proper shoulder. Even if it pulled back here, would not be because it's too much of an upsloping neckline. So you don't have the statistical probabilities for the gap fill play yet. And then the probabilities for a return to the high zone are on a close above 183.16. So those are your two levels. Now, how can you play this? Let's say we're in bull mode tomorrow and you start breaking above this little area here. You can always play it to the long side, and then if it does close above that 62.15, you hold it for the longer term gap play. If it fails or turns around, then you get out of that trade. And that's the way you can trade a number of these things if you're trying to trade them intraday or play something just intraday. Yeah, rising wedges are hard to trade. Rising wedges are one of the hardest patterns to trade. And that's really a hard one. That's really this is your little rising wedge that you're talking about on the 15-minute. You can't even see it on the 1 hour. For those who want to know what a rising wedge is, this is a rising wedge. And your short-term correction, I'll just show you how to do this pattern. This can actually be traded both ways if you don't know. So don't get caught up that it's more often than not a topping pattern. But I'll show you something. And this is just a good, for the people who are tuning in and still here, it again, Amadeus, 178, 180, I don't care where you are long. I'm just giving you the probabilities when they shift. Here's your rising wedge for people who want to learn something. That's the target line on a break, and with that rotation zone right there, I'd wait for the close below the rotation zone also, but that would be your target line from the rising wedge to the downside. And actually, you do have a target line to the upside. All right. But the higher probability move is you have to bisect this for the actual the higher probability target, because that's so steep. So you actually have to bisect it, which that's why it's a little more challenging. You can roughly do it visually. Okay, if you want, you bisect that, because on that steep line, the probabilities are very low. The probabilities if it breaks above this wedge top is actually the bisecting line. You can still trade that with decent probabilities. The actual copy of the rising wedge line is very low probabilities unless it's a very flat wedge. So there you go. If you want to test this and play with this pattern yourself, that's a rising wedge pattern. Just teaching something for longer term people. You're welcome, Amadeus. Christo asks, is there any charting systems that have the actual bars, time axis points, also the daily movement in percent that only moves along the zero? I do not understand that question. If anybody else does, could you explain it to me? The actual bars, time axis points. Could somebody explain that to me? I might just be missing something or too tired, but do not understand that. You almost, and that's way too sloppy. That's not a wedge on the S&P. Mike, are you looking at 42.59 as a 62.5 for the weekly for the S&P 500 for March 29th? Am I looking from the March 29th? You can look at that for the statistical one. The one I'm looking at is from the top for the overall play. You see right here. There's the 62.5 I'm really focused on. Off the major one. Because that's going to be the major swing even overrules the minor swing. So these are the ones I'd be using. The 50% level, which you see is the red line, which is once I take these off, you'll see it right there. And then the 62.5. And then once I take these off, you'll see them right there. So those are the levels. That's on this kind of correction move, and I've had those levels, I actually think, since the not this last Futures Edge podcast, but the Futures Edge even before. You can go back, you'll see those same levels on the chart. So let me just get through some of this for tomorrow. Again, we got that PPI and unemployment figures coming out. The major support I'm watching, 14,183. Minor support is 4183. Minor support 4196. We break below 4196. I'm watching for 4183. To the upside is 42.24. Okay. And then above 42.24, I'm hoping we get some pause in there. We don't have a lot of other stopping points, though, until you get to 42.70, besides really minor harmonics. So let me see if I can fine-tune something for tomorrow, but there's nothing I'm going to pretty much utilize overnight. All right, Christo. So instead of showing just points, it also shows daily the specific trades unique to closing as a percentage as well. So we can see patterns with each 1% daily iterated, not just the points. I mean, you can look at percent on this. And you can even go logarithmic on this if you want to do that based off percentage moves. There are ways to do that. And again, why don't I focus on that? Because, again, we're focusing on the pure levels of price action in here. But you can play around with that. And I don't know of another platform that does it way differently. If somebody else does, you can let me know. Nasdaq, now I got all my lines, but above this high from back on the 8th, above that high we got 13,476, minor 13,533, more significant than really significant 13,618. That's beyond separate from the wedge. So if we were going to break to the upside and you wanted to use these little wedge targets, you'd be looking for areas where these. So if we had a rally tomorrow, I'd be watching for some of these lines to intersect. And remember, higher time frame wedges outweigh lower time frame, and that's a 15-minute wedge. So not as significant. Let me take some of these down. Why didn't that? Maybe I'll do that later. There we go. Huh. I'll have to fix that later. Dow is nice. Coming up, we had 33,350 as the next harmonic, closing above that 50% retracement level. So my next major target's 33,763 to 33,845, and actually closing above this key level right there. Pullback level is 32,875. Russell, 1969.20, pretty much closing on there. Next major target is 1983, followed by 2113. Key support coming in back at about 1942. The DAX, again, coming back down now, triple top after hitting that first target on that double against the rotation zone. That's why it's slightly lower probability, because it dipped in that rotation zone and went higher. All I'm watching with the DAX is a return to 13,790. Notes. This was a cute, it was nearly impossible to trade, but there was this little double bottom because it came up right to the target and then triggered on the longer term close, and there was just so much momentum. Just wanted to leave that out because it did hit the target. By the way, the targets and the closing basis were tested separately. Still watching. Again, it would still be above 120 for breakout, 119.09 for the breakdown play. So nothing there. We already went through crude with that potential double bottom. Take a look at gold later. I'm getting a little tired. Dollar index running back down, actually closing back below these lows. Still daily cycles at the top, weekly cycles still rolling over. So I'm actually still watching for that pullback. Closer to the bottom with the weekly rotation zone, about 103.80 to 103.50. Even with this bounce back. What changes at that point? Not much, but your minor resistance coming in about 105.50, 105.60. VIX breaking now back below 20 and closing down there. So again, as long as this keeps going, the double now, which never triggered, off the table, and major resistance coming in right about this 21 mark. So can't get overly bearish until we start getting a move back below above 21. Next target area 1930, and then I'd be watching these key lows back from the March lows, early April lows, and then possibly 1738. This could be a gift actually for VIX going into September if it stays down in this area. That could actually be a wonderful gift. Bitcoin still having trouble. Still having trouble. On a closing basis above 23.8. Still having trouble. Look at all the rejection from here. That's actually fascinating. If this can't get a move on with the Nasdaq up 268 basis points and the Bitcoin can't do more than this, that's actually very telling on the next rollover. Tesla, no, this double's not invalidated yet. So it did fill the gap today, and then the snapback rally. I think it came within a couple cents. 849.87, 850.30, so just a few cents missed, but then the rally back. We'll take a look at that tomorrow morning. Again, what else did people, somebody wanted me to check? ILMN. I mean, it's got the earnings play tomorrow. You do have the little potential mini double top. So that would be the downside. To the upside, again, you have mismatched cycles. Daily cycles not yet at the bottom. Weekly cycles at the top. Into the weekly rotation zone. Below 213.59, you have 205.34, 279, 196.52. Looks like today just closed above that 62.5. So unless that double triggers, you still statistically, and you've filled this gap against resistance, but statistically, based off the most recent swing, the odds favor a slight return higher. And look where that weekly is. I mean, theoretically, I'd pay attention on an upside move to that weekly in that 87.5 level. Yeah, short term or long term? Are you asking about Roblox? Long term, we're going way down. Short term, it just depends if we're on juice mode. As long as juice mode keeps up, we don't have a strong reversal signal yet. And I'm telling you, people keep buying the crap. So you break above this high back from the 8th of August, 50.90, 54, 56, 58.21, tying in with the declining 200. We don't have a strong topping pattern yet. At this point, without a strong topping pattern, the only thing that gets me overall bearish is a move back below 32.65, which is a long way off. What gets me concerned before that is a close back below about 43.60. Hey, Dr. Michael. You're welcome, George. Let us pray free fall. I wish we could play some music without getting the videos messed up. Amazon. Well, Bitcoin, I'm still long-term bearish. So Amazon with this little mini double coming down first, second target. Now you have a, let's just take a look at this. Now this is technically a triple. The only thing I'd be paying on attention to short term on Bitcoin is a move back below 141 for the gap fill. Then this can't be traded as a double, but you start breaking below you start breaking below that 4-hour rotation zone, but get below this key place. You have a longer term gap play down in here. That's what but I couldn't get short term bearish until, minorly intraday would be for a gap fill, especially if weak markets down to the close from the 9th of August. Longer term, cannot get more bearish until we get below 134, and you don't have double targets, but you're into a gap fill play. So I'd be utilizing those targets. Other than that, you're up against a daily 200, which is pretty strong resistance. You, however, get a close, and with the 200 there, with the 62.5, I actually, before I play it much to the longer side, I need that close below this 200, but then that would also close below 62.5, and that would still favor the higher prices. And then you could keep a stop on the daily with a close into the gap fill, because then I wouldn't want to ride this back down to the gap fill. So that's your Amazon. Netflix is crude oil going high again? The only thing we have long-term major top triggered, short-term potential double. And I've been saying for the last few days, I'm watching for a bounce in oil and then the potential next rollover play. Netflix broke out of consolidation. Looks like it's nearing 50% level from the big drop in Q1 earnings. And you still have the gap here. I wouldn't be looking at that. I'd be looking at this overall more so than the gap fill play at this, the gap harmonics at this point. I'd be looking at these overall harmonics from this. And you start getting above 250, I'd target as long as this juice continues in the market, 279 would be the next target. And as long as this keeps holding the daily rotation zone, you're coming up against this key gap open too, which has essentially been hit. So minor target would be the 37.5 harmonic right around 250. Then the next target above that, if the juice keeps going, 279.37. And if you want to fine tune this is another good area to use the reverse harmonics for the stop raising. I'd use 259, mid 259s as a stop raise once you get above 250. Thank you, Dr. Michael. I appreciate that. Didn't I do ILMN? Didn't I do that already? Thought we already did that. Rich. So you'll have to watch the replay. I already went over that. Where can you find the harmonic fib? It's not called a harmonic fib. It is the, for the retracements, I use the fib retracements that I've modified them. So for newer people here, you use the fib rotation and you modify them. So for the retracement, you put in 0.125 intervals. And you can come back to the video and take a screenshot to do this. See, everything goes by 0.125 intervals. And then for the extensions, you use the fib, trend-based fib extension tool, and you want to do this. You want to use your 0.125 and 0.25 for the trend-based fib extensions. And that gets you your extension. Then you look for price action harmonics and clusters. Like here, if you see, now I went from the lows to this pausing bar high. So now based off the retracements using this ILMN, Look, we got a 75% retracement harmonic and a 12.5% extension harmonic right in the same area. Makes sense? Above that, 244.96 to 247.49 would be another harmonic cluster, and then you have a key close right there. So that's how I'm lining up key areas for targets and areas to take profits and or raise stops. Diz bumping in the monthly. Yeah, I saw that. Disney, they're a big move up. Now, next target on Disney is 125.28 for me. Unless we start getting the rollover play, then I'll start watching for the gap fill. But yes, they are bumping prices also. Everything's bumping prices. But the Fed's going to pivot and cut because inflation's under control. People are absolutely off their rocker. Mike, for Netflix larger gap fill, would you draw from the prior close to the low? From the prior, from this gap fill? Are you talking this gap fill down? If you're playing the gap harmonics from the most recent breakaway little move, it would be from this prior close to the highs for this gap fill. Hey, Rams of Fall. No, the bigger one. And then I'm done. Sorry, I'm worn out today. I'm worn out from this week already. From the bigger one, if you want the gap fill stuff, you'd be coming from this. So you'd be watching for the closing basis above 278. For the overall big move, I'd be using the 62.5. But for this, those harmonics are a long way. For that play, I'd be using a lot closer targets for Netflix to trail stops, especially this 300 level, should the rally continue. Your next target on BNGO is 328. Beyond that, let's just see where the overall market is. Then I'm done. Then beyond that's 479. Got some stuff on order. Amit. Got some stuff on order. Again, if anybody wants to donate to offset costs of new streaming equipment, you're welcome to. Trying to keep this free for as long as possible. So that's where we sit. All right, I'm worn out today. We've gone almost an hour. Again, do you think Nasdaq will eventually roll over and test the lows from June again? Yes. It's just timing. I looked at the Mac Studio. No, I'm going with another fully loaded MacBook Pro. I looked at the Studio, but I want something because I might have to do some traveling coming up in a while. So I wanted something to also take on the road with me so I could live stream. So I just went fully loaded with a maxed out MacBook Pro that I can also do the editing on for other stuff, because the editing actually takes that takes a lot of juice. You're welcome. I looked at the Mac Studio. I might do as a backup one in a few more months for at the home as a Mac Studio, because I like to keep a primary and a backup. It's lucky I had backups to this, else you wouldn't be seeing me now. You're welcome. Are you calling me Mikey like Bob? All right, so that's where we sit. That's where we sit. I will chat with everyone tomorrow morning after the PPI numbers. You have 3, 2 with the max and 1 with the ultra. Love the Apple Silicon. I was going to ask you, Apple. Well, I'm getting the max, or is that the ultra? I'm getting the whatever the one with the highest is. So that's where we sit. I generally max out computers because then they tend to last longer. But I'm glad to hear you like the Apple Silicon. I will, Amit. You're welcome, Ramsafal. Again, thank you everyone for tuning in, and I will chat with you all later. See you tomorrow morning. Bye for now.